There are almost $200 billion of branded drugs on the market that will lose their patent protection over the next 5 years. What is Ligand's opportunity in this environment where it has a portfolio of attractive assets that could potentially replace some of the medicines losing their IP? Todd and I explore the possibilities and look at how the companies capture returns over a limited period, as development and initial launch consume sometimes up to half of the product's marketable life.
One of the themes that I've been talking about recently in interviews and things like that is the patent cliff that's coming up. There's a report by Morgan Stanley that came out in the last few months, and it identified about $180 billion of sales that will lose patent protection by 2030. I think they named Amgen, BMS, Merck as kind of some of the biggest losers out there, and some of the products that are on that list are Kadcyla, it's an ADC. There's Trulicity, then of course Keytruda and Opdivo, which are the very well-known checkpoint inhibitors. Those are all falling off, and it seems like Ligand fits into an interesting space here, where some of the the opportunities that you have could fill this patent cliff. And I'd like to hear about what you think about the patent cliff. Is it different from previous patent cliff periods out there? And what role does Ligand have in potentially filling that?
Yeah, I mean, I think that just my view is that you kind of see cycles of this, and this was big news in the 2000 to 2005 arena, of time as well, where there were big companies facing very significant patent cliffs. All companies face that. I mean, the reality is our entire industry relies upon the patent legal system. And that is a legal monopoly granted to us by the government in exchange for sharing all of the information, the new invention, in the form of a patent. So you have to share all the information rather than keeping it a trade secret, which could be a strategy. And that's really good for everybody. The issue for us, of course, in the biotech arena is that patents are 20 years. And that may sound like a long time, but technology moves abreast. Competition is abreast of you. And so,
and also you may lose half of that in development and other things like review or things like that, right?
Well, yeah, that's what I'm saying, is that you have to file the patents long before you are commercializing the product, because you're competing with other potential patent filers. And you want to be the first to file in a certain area of innovation so that you're not blocked by somebody else's patent. So there's huge calculations going on about when do we file our patents. And on average, that's about 8 years before a product is actually approved for marketing. So on average, companies have about 12 years of patent life when they actually start generating revenues. And of course, the first year, maybe even two, they're not even profitable. They're investing in market development.
Right.
So they really have about 10 years to recapture the return on over 10 years of investment. So there's a huge J-curve investment cycle within our industry. I don't think when people talk about pharmaceutical pricing, right, they really fully understand the returns. But if you just look at people think they're just massive profits in the pharmaceutical industry, and it can be very profitable. But if you look at the average P&L, in fact, if you merged all the large pharma companies together and did the math on the combined P&L, they've got about 20% net income margins or so. That's a lot less than some other industries. So, I think that there is a lot of money plowed back in to research to, overcome the patent cliffs that they'll be facing. And they've got a lot of research ongoing. I mean, I know Merck's facing some patent cliffs, but, they're launching Capvaxive, which I think is a really excellent vaccine, into the Prevnar franchise, which is a $6 billion franchise. So there's a big opportunity there for them to grow that space. And they've got a lot of other things going on. And that's the risk we all face. Our role, like any other company, is to focus on our own patent cliffs. And 2 years ago, 2.5 years ago, I guess now, when I joined the company as CEO, everybody was focused on our Kyprolis patent cliff. Kyprolis is an Amgen oncology drug, and it will go off patent and there'll be generic entry in late 2027. And that's a big drug. That's about 40 million of cash flow and royalties to us. And it's been a great drug for patients and for Amgen from a business perspective and for us. But it's your job to work through those patent cliffs. And everybody was asking what we were going to do about the Kyprolis patent cliff 2 years ago. Now, when you're looking at Filspari and Ohtuvayre and Capvaxive and all the other things in our portfolio that are growing, we never get that question anymore. And our next major patent cliffs are 8 and 9 years out.
Okay.
So
well, and you're also making subsequent investments that kind of keep on layering on more and more to that.
That's exactly right. I mean, we just did the Castle Creek deal in trophic epidermis bullosa, and that is a very high unmet clinical need disease. There is one treatment out there with Crystal now, which is effective, but has its limitations. This is going to be very complementary to that, we think. Very excited about that. That could be a very large drug. We have a nice, we syndicated that deal, so it's a high single-digit royalty, but we have a mid-single-digit that accrues to ourselves at Ligand. Things like that will be big contributors to us in the future, we believe. The microcystic lymphatic malformation drug, Palvella, that could be a very big drug. Currently, 0 treatments for those patients. We love 0 to 1 strategies. Currently, 0 treatments. This will be the first treatment. We have that with Zelsuvmi, which we should be launching here mid-year. So, those are the types of opportunities we like, and those will solve our patent cliffs that we have out in the mid-2030s.
Okay, very good. Yeah, and I think there's a very helpful, for people watching, there's a very helpful chart that you guys provide in your presentations that show all of the different layers of products and how they're expected to contribute to the revenues of the company.
Yeah, that's been a good communication tool. I think the significant majority of our top investors are generalists. They want exposure to biotech, innovation, etc. But it's hard to build a portfolio of your own biotech companies if you don't do that every day, all day for a living. It's very complicated.
Right.
So we kind of offer exposure to all of that, but combined with very predictable growth profile. We're profitable. We'll never have a gun at our head in terms of financing risk. That's it. That's one of the biggest risks in biotech. It's not you have the clinical risk, the regulatory risk, CMC risk, market risk, and all of these risks. Financing risk is a huge risk for biotech investors.
Yeah. Well, that's the dilution problem that a lot of small cap investors have faced in recent years.
Exactly. And so that's you kind of have to forecast that into your underwriting. And so all of these things really have to be considered. We solve a lot of those problems with a very well diversified but profitable and rapidly growing portfolio.